So this slide nicely compares the different options that you have when you use crowdfunding through coins and tokens. It compares private offerings, public offerings, crowdfunding, and tokens. Now, of course, this is a slide which has been written by people who are interested in token financing. So, bear with me for a little bit. But if you look at the general size if you look at the general criteria that you can think about is who do you have access to? Do you have local investors? Do you have access to local investors or to a global investor base? How much can you raise? Do you have access to retail investors? So can the little guys participate? That may be something that you do or do not care about. Is it fast? Are the fees low or high? What does the regulatory burden look like? What's the transparency of your ownership? So would you as a funder would know who is on the other side? Is there a market for your securities afterwards? That's important because if you can sell the securities after you bought them, that means that you don't require possibly, the trading costs are lower. So that's usually something that is a plus. And what are the transaction fees if you do have transactions? And how does it work with dividends? Can you easily issue dividends? Now, if you look at all of these, public offerings take a long time. They're expensive and they have a high regulatory burden because I need an investment bank that underwrites it, and they will have to do a lot of work for you and with you, and you have to go around and find your investors and do a roadshow and all that. It's very disruptive. Private offerings usually limit your investor base. The regulatory burden is not necessarily particularly high. There are a lot of exemptions that apply. Transparency of ownership is usually pretty large, as in contrary to what this table says, you actually would know who your investors are. Secondary market liquidity is very low. Transaction fees are very high. When you have crowdfunding, you have, of course, access to very large community, essentially the worldwide community. Anybody can use Kickstarter, but usually crowdfunding is almost always used for financing of consumer products. So if you want to have something esoteric, something non-tangible, something like a service, it's very hard to excite investors on Kickstarter. And it's also not clear how the funds would work, how the transfers would work, how you could pay dividends is really difficult. If you have a token or a coin, you have access to the entire world. Tokens can be immediately traded. The low regulatory burden is something that we have to discuss in a minute. But generally speaking, a lot of the advantages of crowdfunding exist, and a lot of the advantages of public offerings exist. So it is actually a very, very clever way to finance a business. Let's look at the statistics here of the token sales. As you can see, the line is the number of sales, and the bars is the total amounts of funds sold. We're now currently at about $8 billion that have been raised in just over 2 years, or actually less than 2 years, in this token market. In fact, actually, as almost within a year, we have almost 7 billion in token money been raised. Now, on the grand scheme of financing and the developed world, this is not a lot of money, but the magnitude and the speed of this increase is truly remarkable. And considering in particular that in late last year, China, for instance, closed access to many of the online exchanges, so try to make it harder for people to participate in ICO, that has done absolutely nothing to limit the use of it. It's almost the other way around. It just got more and more out thereafter. We'll discuss in a minute why. Now, if you look at the size of the amount of funds that have been raised from the various different types of ICO firms, this is data from Smith & Crown. It's only for 2017. A large amount of money has been, most of the ICOs are in the $5 to $25 million range. So that's basically Series A territory for venture capitalist funds. There's a few which are much larger. So that's so from 25 to 50 million. That is not the amount of money that you would go public with for an IPO in the US. over 150 million, it may be worth going public for a firm. But generally speaking, if you look at the overall amount of money raised, these are all, and the best comparison for these are small firms that are at early stages. They essentially all are from a funding perspective at the angel or at the venture capitalist level. Now, if you look at where the money has been raised, you may notice the little dot there. In Europe, that's Switzerland. That's because many of the Ethereum-based firms reside there. You also see a few islands in the Caribbean. That's also because in not Trinidad and Tobago, where is it? In not Barbados, in the Cayman Islands. This is where a lot of the firms reside. And of course, a lot of firms are using ICOs when they're US-based, as US-based firms. All right, now what do we look at here? So this is just gives you on the horizontal axis the general activity level just for the year 2017, and it shows you the amounts raised by particular companies. Now you see Filecoin, Tezos, EOS, Bancor, and so on. They have been raising money in very large quantities over recent years. Days. Now, which industries are these ICOs in commonly? Well, most of them, and that's not a surprise, are in finance, because blockchain, native applications of blockchain technology all relate to the financial industry. But there's also information-based systems. So, exchanges could, or information providers could service as one or the other. If you look at if you split it up by subsector, you have the finance industry. A lot of it comes from payment processing, exchanges, some of it from banking or new cryptocurrencies. Information technology would go into gaming, social networks, and so on and so forth. And then it becomes, real estate obviously plays a role. Data analytics, and so on and so forth. So it gives you a good sense of the distribution and shows what the major forms, particularly for finance, are and the financial sector are about. Now, if you go by functionality, if you want, as you can see here, if you split it up by subsector, the largest amount goes into some form of platform. Now, this is obviously driven by ICOs of the kind of EOS and Bancor, which basically develop smart contracts or even new cryptocurrency exchanges. Yeah, not exchanges, cryptocurrencies. So now, having talked about all of this and how all about the funding that they've been raised, here's the ugly truth. Most of the token offerings that have come up over the last year and a half are firmly and squarely in the scam territory. So this law firm, Satis Group, has gone out and they looked at all the data from ICOs that were announced, not necessarily those that went through, and they analyzed whether or not the ICO was legitimate, whether it was determined by the community as a whole as a scam, whether it failed. That's the second characteristic, where it just didn't attract the funding goal. Whether it was gone dead means it did get some funding, but they never managed to contribute any code. So they collected money, but they never did anything with it. Or, the next 4 points are sort of somewhat firms that are somewhat successful in the sense that they got funding, they wrote some code, but they may not have gotten much out of it. Some are promising in the sense of that they got more than dwindling, but they still have a long way to go. And there are those that are extremely successful. Now let's look at the statistics here based on the data provided by this group. Well, in their assessment, 81% of all ICOs that have been announced are scams. They're obvious scams to the community and to anybody who reads them carefully. Many of them never see the light of day. Many of them never make it onto regular exchanges. But there are some coins and some of these cryptocurrencies that are clearly ridiculous, like the Dogecoin. Anyway, you also see that a very fair fraction of the remaining ones have either failed or gone dead. So that's another 11%. So there's only 8% of all ICOs that actually move on to trade. Of those, about half are successful. About another third is dwindling, and maybe another a sixth or so, maybe a little more than that, about a quarter maybe, is reasonably promising. So, I mean, the data there for those that actually make it. So those are the ICOs that probably see the light of day. It's not terrible, but there are some concerns. Now, if you look at the distribution, the ones that are the largest seem to also be the most promising and successful. Those that are the smallest, the number of dwindling cases there is the largest. Now, one has to be fair. When you have smaller ICOs, and 50 million obviously is still a lot of money, but they're still small. They're usually based on a small team, and those small team of developers may very well have a hard time, getting their code out and getting their product ready for the market. Now here's another piece of data from a new Bitcoin using token data. They looked at 902 crowd sales that happened in 2017, and they determined that taken together, 46% of those have already failed since they were announced in 2017. So they've either fully failed or they never made it past the funding stage. So that's a pretty large fraction. Now, it may be worth pointing out that there are some statistics, for small firms, generally speaking, for firms that have employees, about 20% of those don't make it past year one. So, the number, of course, 46% is much higher. But, keep in mind that this is also a time when there's a lot of probably overinvestment, a lot of craziness going on. If you look at venture capital backed firms, of those, 75% never return any cash to investors. And of the remaining ones, about 30%, in fact, implode eventually.